What's going down, man? What's going down? So today I'm gonna go ahead and do a live breakdown with all the mentees today. Got a few on board. We're gonna break down this Microsoft trade. It was an amazing trade, as you can see right here on this Microsoft trade. I made over 2,000 on this trade. I could have made like 6 or 7 or 8, but we can't be too greedy. You feel me? So today on Microsoft, Bill Gates then came through, as Tizzy said. But let me go ahead and break down how we're able to call out the puts right here at 847 and make over $2,000 by the time I think I was done. Yeah, I was done in about 851, 852. So it was like a 4, 5, 6 minute trade type shit. Make $2,000. So to go ahead and get started, right? The first thing that you want to go ahead and do is always, while you're trading options, make sure that you have your trade view chart open. And every single day, mark up your pre-market highs and pre-market lows. So for me, I'm a little experienced, so I don't always have to mark it up because I can see it. But you always want to just mark it like this. Go right here, press options H like that. This right here for pre-market lows. And right here is pre-market highs. Boom. All right. So I'm going to look at this level right here as a breaking point, right? So today on Microsoft, what is the reasoning? Like, why exactly did we buy these puts today on Microsoft, right? Well, as you can see,
Hold up. What time frame? Sound? What time frame is this chart on?
so
3 hours? That's it.
this is the 3 minute time frame.
3 minute? Okay.
Yes, sir. So yeah.
Why
So
mine look different? Okay.
yeah, for sure. So yeah, I mean, like on this trade right here, the biggest thing that I would say is we've seen an amazing pattern being built. But besides the pattern that we built, I want you guys to definitely go ahead and take a look at this. Well, I can't even see. There it is. Click this shit. There we go. So not only did we see a nice bear flag being built today on Microsoft, well, a big part about today's trade is you guys know I love the data trading strategy. Now, what does that mean? If there's data being reported in the day, like in the stock market, and let's say that we're in a range where we can see downside, typically a data trading strategy is going to result to seeing a pre-market high rejection on SPY. And SPY typically is very responsible for a lot of the major stock movements in the market as it holds the top 500 stocks, right? So this morning, we had a move right here to pre-market highs on SPY. Go ahead and highlight it. And we basically were holding right here pretty lightly, pretty gently, but we've seen a rejection a little bit above pre-market highs, which looks amazing for the put buyers, right? So I basically based this put trade that I had a very nice bearish confluence and bearish bias today on SPY, right? So I seen a bearish bias on SPY. I also noticed that we're in a bear flag on Microsoft. And what is a bear flag? Well, look at it right here. A bear flag, let me go ahead and get an isolated picture, right? So a bear flag is going to have a pole and then a flag being created within the pole, right? And then a downside movement after you break out the flag, right? So typically, if you want to enter a trade on a bear flag, you want to enter on the breakage of the flag right there, right? So see right here on Microsoft, we were coming down here and now we were creating a flag in the zone, right? And then after we broke out of this bear flag right here, on live call today, we were screaming about, yo, I'm watching Microsoft puts, I'm watching puts, I'm watching puts. And then actually at 8:47 today is when I went ahead and called out the puts in the chat, as you can see right here. Microsoft puts, 335 puts at 8:47, right? So I actually got into my trade today at 8:46, which is immediately right here. I wanted to see a 3 minute candle close out of this bear flag, right? After it closed, I'm literally waiting for even the slightest, like I'm waiting for the slightest pullback, and I'm on that shit, right? So I was waiting so patiently, right? I was sitting here with I was literally like, damn, I'm shaking. I'm like, bro, I need to pull back because I'm ready to get into this fucking trade, yo. So right here, as you can see, it had a nice pullback, a small pullback to this trauma level here, right? As soon as I seen it, I bought puts. Live call, I'm calling out puts, boom. And now we're able to capture one, two, basically like this whole entire move right here. And then right here, so this right here, let me go down here. Let me go to the 1 minute chart quick too. So you can go ahead and see it. I'm going to show you this trade minute by minute. So you can really have like an image of like what's going down in the stock market. I'm not really break that down. All right. So right here in the stock, right here. This is like after the Discord got to play, right? At 8:47. So you could have caught this pullback right here and got in right there, right? So we captured this whole entire move right here. But the thing about it is at 8:49, this is as soon as we're testing the pre-market low level, right? As you can see, this horizontal line that's orange, this is the pre-market low. So after we broke through pre-market lows right here, now we have to kind of notice one thing, right? Go ahead and look at spot. Yeah. Yeah. Now that you broke pre-market lows, go ahead and take a look at spot. And before I even talk about SPY, right? Notice how today, the first candle of the day, it made a nice wick here on the 1 minute chart, right to pre-market highs. It had an immediate rejection. And I always tell you guys, I'm gonna even put it here on the screens. This is such an important piece. This is why I want to host this class. I feel like people have to understand that this data trading strategy equals rejection at pre-market highs. Boom, right here. So the data trading strategy means that you would typically see a rejection at pre-market highs. And I usually target SPY on this move, but for nice tech stocks that we typically trade, they also typically respect the same strategy. And I've been trading for almost going on 4 years now. So I've been through many different sets of data, and I just been like, just adding shit up. And I'm just like, damn, like my 3rd year into the game, I'm like, yo, this shit is not like, it's not like, it's not a coincidence. Like every single time that we're in a market that has any life of room to the downside, and like if we're in an interesting condition in the world and there's data being reported in a day, I always see rejection at pre-market high, right? And not only is it just Microsoft today or SPY, but like I'll even show you briefly, like look at AMD today. The same thing. Basically. AMD just kind of did its own thing, but overall we're seeing downside. Well, I think it was NVIDIA I was looking at for the projection. It was NVIDIA. So NVIDIA's pre-market high essentially is right up here, right? We usually here at the top of this wick. So we've seen that the first 5-minute candle of the day, it came here, rejected. It could not close above pre-market highs. What that means is there's sellers literally sitting right here above pre-market highs, waiting for the stocks to get above there to sell it back down. So NVIDIA had the same setup there as Microsoft, SPY, and everything, right? So now come back here to SPY. Now that we're able to see a bear flag being created on Microsoft, right? You want to have a good confirmation of also that SPY is also moving in the same direction. Because we bought puts today at 8:46, which is right here. But at the same time on SPY, if you look right here at 8:45, SPY is attempting to engulf this green candle right here. And typically, if you see a bearish engulfing candle, you can definitely bet that you see a nice move down to pre-market lows, right? So SPY's pre-market lows, as you can see on Mac, press options H is right here. So this right here is pre-market lows. This right here is the time that we're entering the put position. So because I have a target overall to come down to pre-market lows, I can have a high probability setup right here that I know, hey, SPY typically is gonna have like a little bit more space to run to the downside. So right here, now SPY is slipping. The same time SPY is slipping, this is this is gonna rhyme. SPY slipping and Microsoft is dripping. You feel me? So like, and shit, I'm very understanding, like, hey, we're in a very trendy market right now. So if you're able to catch a really good entry on a trade, especially on a bear flag setup, on a day that there's data, and we're also targeting pre-market lows, and we're in a very, very interesting time right now with the war in Gaza and Israel and all that, you can definitely bet that there's going to be a nice trend whenever you catch it on time. So today on Microsoft, we were able to target here at pre-market lows, and we got it. I saw that shit basically immediately, but we had way more room to the downside. As you can see, that shit printed for a long time, right? So like overall, the whole idea of this concept of the data trading strategy is I'm going to be giving you guys access to the websites to basically understand and be aware whenever there's data coming out in the market. But typically on days like this, data trading days, these are days that I love to actually size up on my trades, right? A lot of times I'm only taking trades of like, 3, 4K into position, but days like this, I'm very comfortable with going like 5K, maybe a little bit more, nothing over like 57. I have a certain game plan. I don't really go above that. But on days like this, it's a very high probability chance that if you find a nice rejection on SPY and then you see other bearish stocks are looking pretty weak, you can go find these bearish stocks, try and find setups, right? Try to find common patterns, bullish pennants, bearish pennants, bear flags, bull flags, right? Take these trades off of these bull flags and off these bear flags. And if you have a day like today, this is like a license to print money because you know that typically like 8 times out of 10 on data trading days, we're seeing a little bit of rejection and red in the morning time. So like this right here is free game. Like if y'all have anything wrote down in like a notebook, always like write down data trading strategy equals watch for the rejection at pre-market high. And number two, so that's the first piece, right? Let me even bring up my text box again. I'm gonna put it right here. All right. So that's number one, right? Number two is you want to search for high probability setups. Number two. And what is a high probability setup? Bear flags, bull flags, bounces off of the like bounces off a supply zone, rejections off a demand zone. You know what I'm saying? A move like a rejection for pre-market highs, a bounce on pre-market lows. These are all like high probability setups. So on days like today, when data is out in the world, you're able to find number two, a high probability setup, right? Then after you find a high probability setup, number three, you want to wait for a pullback plus, before I say wait for a pullback, wait for confirmation, bro. This is number one. Wait for confirmation that this is, bro. Literally, as soon as we broke through this bear flag right here, it was no hesitation for me. I got my puts at 846, and we got this confirmation for me right there. I see the rejection, and then after that, number four, ideally you always want to wait for a pullback. So wait. And I don't know why it's in all caps. I ain't trying to scream at y'all, but hey, if it works, it works. You feel me? See. Wait for a pullback. Let me go ahead and describe what a pullback is, because there's different definitions of a pullback. So, for example, right, today on SPY, we had a rejection basically a little bit above pre-market highs right here, right? Let me go ahead and circle it. So we had a little bit of a rejection. Actually, let me go ahead and circle it right here. So this is like our rejection on SPY up here, right? I'm gonna go ahead and grab my rectangular tool so I can go ahead and chart up this range. So right here on SPY, we had a nice plane of rejection, right? Right in the zone. So now, let's say, for example, I'm looking to trade SPY, right? Let's say I missed this whole entire put move, right? I'm like, damn, I missed the whole move, but I do not want to chase. That's the exact way to think. The time that you want to get into puts is you want to go ahead and draw. It's basically called, man, there's a lot I'm about to put out here right here. Just stay with me. It's called an anticipation trend line. What's it? All right, so what does that mean? Let me go ahead and show you real quick. So today's obviously a data trading day. So I'm gonna go right here. So I'm gonna go back in time here on SPY. I'm gonna go back here on time. All right. So right here is back in time on SPY. And let me go ahead and press play and show you what I'm talking about. So boom. Right now, let's go ahead and pretend that it is 8:45. I don't know where the markets are going. This is the only thing I see, right? I'm going to press play. Boom. I see SPY dripping, right? The very last thing you want to do is see that the puts have went in their favor and come here to come chase puts because you missed out on the entry, right? This is the last thing you want to do. What you want to do is you want to understand, hey, what goes down must come up. what goes up must come down. So if I want to go ahead and make some money off SPY puts, I'm not going to buy it up here. I'm going to typically look for a retest into this supply zone up here. But the thing about the market is they do not want to make it that easy for you. So 9 times out of 10, if you see a point of rejection like this, you're not going to see a double top. And let me go ahead and show you what a double top is looking like on Google. This right here is a double top, right? This is a double top. So a double top right here is showing you that you're seeing a high right here. And then let me move this thing. The second high is exactly in the same exact range, right? So you're seeing a double top in the same exact range, right? Typically, the market isn't going to make it that easy. What you're going to see is this. You're going to see a lower low trading. Let me show you what a lower low looks like. All right. Let me find a good picture on Google. They bringing me some bullshit. They bringing me some bullshit. All right, they trying to mess up my flow here. Let me go to double top and see if we can see a better image of what I'm looking at. All right, so because I can't really find a picture on Google, I'm gonna just draw myself, right? So let me show you what a lower low is gonna look like. So here is my brush. So let's say right up here is my stock, right? We go up in price, boom, 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 and then we drop, right? So a double top will look like this. If you go ahead and get your line like this, put it across, that double top is saying that, hey, we're gonna go ahead and rise. We're gonna go ahead and rise literally back up into the same zone right here before seeing a rejection. And I wish it was that easy. Everybody in the market would just be a fucking millionaire. But typically, the market is going to create a lower low. A lower low is typically a little bit lower than the previous high, which is going to be typically like somewhere like down here, right? So let's go ahead and say that we're going to have a lower low right here in the stock market, right? I'm going to get my circular tool. So this right here is what you call a lower low. I'm going to change the color right here so we can go ahead and identify this as a lower low. I'll make it yellow. All right, there we go. So boom. Now we have that right there. So this is what an ideal lower low will look like. They come right here, chop a little bit, and then oh, let me do this again. I don't know what the fuck they doing to my brush. All right, there we go. Come up here, and then from here, they haven't seen downside, right? This is typically what they do to you in the stock market. So now correlating this to SPY, this right here is the original high, right? So looking at here, a lower low would typically be somewhere right here that it's going to create, because it's not going to be that easy. It's going to typically be a little bit lower than the supply zone, because they just don't want you to, they don't want people to make money that easily. So let's go ahead and press play and see how it looks like. All right, boom. There we go. Boom. So now look, this wick right here is a little bit lower than the previous wick of the high of day, right? So if you're looking at puts in the stock market, definitely be patient, be disciplined, and be poised on your trades. But do not wait for it to come exactly into the same zone to go buy puts. You just want to be able to catch every move. That's why I stress on averaging into your positions, because let's say that we go ahead and buy puts right here in the market, and let's say that it goes up in price a little bit more into the supply zone. Well, I bought puts right here, and I bought puts right here. So I'm able to, average into my position. Let me go ahead and press play. Look at that. Crazy. And look, let me see, look. And now we hit my original target, which was pre-market lows right here. So what I mean about having an anticipated trend line, let me go ahead and bring it back to what I'm kind of mean by that, right? This is free gems, but like y'all want to definitely write this down, because like I'm gonna record this class and stuff like that. But like if you're watching this live, definitely write this down. But this is some game. Because I basically do this shit right here in my brain. Like I don't even draw the trend lines. I just I understand, right? So Now go ahead and press play, right? Let's play, boom, boom, boom. All right, cool. So now we're in a downtrend, right? Now we're in a nice downtrend. So what I go ahead and do is on Trading View, go to your tool right here, go to extended trend line right there, and go ahead and start here from the previous high of day, which is right here. Now from there, you can go ahead and draw, and you can kind of anticipate drawing a trend line of where you believe that the stock market is going to hold. Because if I believed that like the stock market is going to create a double top, it would just be like this. But because we're smart money traders and we understand price action and we're learning from people that have already traded for years on end, you're typically going to have the trend line be a little bit more slanted like this. And you're typically going to be respecting this trend line, right? So boom, there right there, it's a trend line. I'm gonna go ahead and color it. Let me color it something that stands out. Like, what should I color this shit? Like purple or something? Pause. Nah, I ain't no purple. We ain't doing no fruity shit up here. All right. All right, I'm playing. All right, let me do cyan. So this is cyan, all right? Well, there we go. So now I have drew my anticipated trend line in hopes of seeing a lower low. So let's go ahead and press play. Let's see how it plays out. See a bounce. See a bigger bounce. Look at that. Y'all see what I'm talking about? Bruh. And it's gonna take a little bit of time to perfect it, but I promise you, if you just keep it so simple, like keep it to the simplest manner, you'll be able to catch sniper entries. Like this trend line I drew just now, I just drew it, right? And I'm just like, I literally drew this with my brain. So, and look at this. Look what happened. We hit the trend line exactly in the trend line. And then we come right here to my intended target, which is pre-market lows, and we smack the TP right there. And I know it's very easily, like way easier said than done, but this is one of the best things that you can do as a trader. Be very disciplined, be patient. Understand that if you see a move like this play out, don't chase these puts. No, sir. You will not have a fun time trading. Draw your trend line in advance, right? And have good risk management. This right here is where I'm buying my puts. If we go, so and then if we close a 5-minute candle above this supply zone, I'm out the trade. I'm out, completely out, simply. But this happens so many times in the stock market. Y'all probably seen it, but now that I kind of gave you guys the game right here, now it makes much more sense. So after you see a lower low, you guys know a lower low, what is typically signifies a downtrend in the stock market. So in today's class, I went ahead and covered the data trading strategy and the step-by-step sequence of how to actually identify movement in the stock market, right? And let me see, someone put something in the chat. So you got a dip? No worries, bro. No worries, my brother. I'm gonna go ahead and post this class. And no worries, brother. I got y'all. So yeah, the class is basically over right here. So like I've said, number one, on a data trading strategy day, you want to always wait for the rejection at pre-market highs. Number two, you want to search for a high probability setup. Now, what is that setup? You're gonna have bull flags, bear flags, bullish pennants, bearish pennants, bounces off pre-market lows, rejections off pre-market highs, bounces from supply zone, rejections from bounces from demand zones, puts from supply zones. These are all high probability setups. And number three, you want to wait for confirmation. Say it with me. If you're watching this video, say it with me, right? Number three, wait for confirmation. And number four, lastly, wait for a pullback. After you see that pullback, go ahead and, matter of fact, let me go ahead and add it into this thing if I can. After you see confirmation, go ahead and wait confirmation. Look, number five, you're gonna go ahead and no, not in lower caps, all caps, size into your trades. I'm gonna put 3 exclamation points because y'all don't. Some people are just buying a full bag. It's just not how to trade, right? And what that means is you buy starters first. So that means I'm put this in all caps. Look at this. It means buy starters and ease into full bag. Boom. So this is the 5-step sequence of how to trade on days like today, whenever you have data trading days. And honestly, this is a 5-step sequence on how to trade, period, right? If you just remove number 1 right here, this is the sequence of how to make money trading, period. Wait for the setups, wait for confirmation, wait for the pullback, and then size into your trades. It's that simple. Hopefully y'all enjoyed today's class. I will be going ahead and putting this link into the Discord chat, so you can go ahead and rewatch this video if you need be. But before we go ahead and close today's class, do y'all have any questions for me of anything?
Yeah. I got a question. Those trend lines that are on your charts, were those an indicator? Or did you draw those yourself?
Oh yeah, I drew those myself.
Okay. Because I'm moving around a lot. I wasn't able to just see you draw those. And then you said the most common patterns we're going to see, right, is the bullish and bearish flags and pendants, right?
Those are pretty common, but I would say like your bread and butter for a high probability setup would typically be a play off the pre-market lows or pre-market highs, because the pre-market lows and highs kind of show you this is where banks are basically buying and selling their positions. So these banks, if you see a level at pre-market lows, that means that banks basically had a buy order here at pre-market lows. So in pre-market, they couldn't sell it off any much further. So what that also means is typically in the same trading day, you can go ahead and mark up your pre-market lows. So I want you to definitely mark up your pre-market lows and highs every single trading day. Because if you do that, you will find where the banks are putting in their money, and you can capitalize off moves and also use them as targets.
So if it bounces off that pre-market low twice or whatever, you go for the call. Bounce off the high, we go for the put.
In certain scenarios, yes, but like a lot of times, how I use this, I use the pre-market lows and highs kind of as like a target. So instead of saying I'm gonna bounce off, so instead of saying I'm gonna bounce off pre-market lows, I'm gonna buy puts somewhere in this range, and I'm gonna target them down to pre-market lows type shit.
Gotcha.
Yes, sir, yes, sir. My boy Mike, you have any questions for me, Mike? Any questions, my brother?
So those blue lines, I forgot what you said it was called, but like how did you do that again?
Okay, like this one right here.
Yeah. No, on the Microsoft one.
Oh, right here.
Yeah.
Okay, I got you. Look, so for the blue lines, let me go ahead and delete it and do it again quick. So for this blue line right here, how I did it. This right here is the image.
Right.
Bear flag. All right, let me see it quick. All right, so this right here is basically my image of the bear flag. Where we have the right here we have the pole, then we have the flag, and then the second pole. But so I see it like that. So this morning, how I played Microsoft is what I did is you can go out here to your tools here on TradingView, click it like that. And from here, I want you to go ahead and click on trend line right there. And so for the trend line, you want to go ahead and now how you want to do the first pull is this right here is a massive sell-off move to the downside, right? So I'm gonna go ahead and then grab it like this, draw it from like the opening candle body down to like the low of day at this time frame. And then from here, I'm gonna go ahead and draw another trend line from this level now up until this flag point, right? And then now the flag, let me see. Okay. So now the flag is looking like this. See how the flag kind of has like a top, bottom, top, bottom, top, bottom, but it's kind of like a trend on the top, right? So what you see is it's kind of like a trend, but on the 1 minute chart, it's like a little bit, it's looking like a bearish pennant on the 1 minute chart. But on the 3 minute chart, you can see the flag a little bit better. It's Thursday. Today's Thursday. There we go. Oh, here we go. So now,
What is it called when it hits the bottom or the top pre-market twice? What is that called?
That's called like a it's called like a double bottom or a double top.
Okay.
So like I said, with the bear flags, you're gonna notice like consistent high points, right? You're gonna see a high point right here, high point right here, high point right here, but like you see them kind of like in the same plane like this. Like you see a consistent trend line being touched for a move to downside. So seeing right here, I noticed that I see a consistent little trend right here being built like this. So I'll go ahead and draw my tool again from here to here. I draw it like that. This here is a 3-minute chart. I see it trending. So after it breaks right here, this right here is now my second pull for the bear flag. So now, if you go ahead and compare right quick, if you compare, let me do one chart. All right. So if you compare this picture right here, this picture to this one, it's damn near the same. So it's like the only thing I didn't even need the ball line here. But looking at it like this is the same exact bear flag right here. Drop, consistent highs, second pull, and we captured this move by buying puts right here. And it was a massive pattern. It was literally right out of the candlestick traded Bible. Like it was literally right out the book, bro. And I seen it played out. I'm like, yup, we making some money today. I see the pattern, execute, solid trade, man. You said that makes sense, bro?
Yeah, I do. Yeah.
Yes, sir, bro. Well, for sure,
bro. So just to make sure, in a bearish flag, a drop followed by consistent high points would result in a put.
Exactly. So you want to find and wait for confirmation, definitely. But what I want you to do, I'm pretty sure I forwarded you the book called the Candlestick Trading Bible, and that one kind of shows you all the different patterns, all the different hacks, and all the different nicks, and also like the mindset of how to approach it. So I definitely want you to finish reading that book, and also I want to schedule our first one-on-one call so I can kind of give you like all the game and kind of walk through everything, and then from there, my bro, let's go ahead and get to this paper, man. This is gonna be a great year. And let me also pause this recording.